Good evening, everybody. Welcome to this evening's ACY Securities webinar, Live Forex Market Review. My name is Duncan Cooper. Welcome. If you're on our YouTube live stream, I can't see the chat. So if you're on there, you're more than welcome to watch, or you can just jump into the webinar, giving you the link, but I can't see the chat. So if you're talking to me, I won't be answering your questions, but I can answer your questions if you come into the webinar. All right, let's get into it. But housekeeping through risk disclaimer, please. Of course, the market is very volatile at the moment, so anything I might be talking about, levels I might be watching over the next 24 hours. If you decide you want to trade at those levels, that is your decision. I'm not giving you personal advice. It's only very general advice. We're all responsible for our own actions. All right, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time trader. Trading for more than 15 years now, mentoring clients for more than 10. If you want to contact me, you can just get me on the email on screen, duncan.cooper@acy.com. As well, through the week, you can connect with me on our website, acy.com Market News tab, our YouTube channel, ACY Securities Australia. And you can also connect with me personally on Twitter and LinkedIn. As well, through the week, in our Telegram channel, you can connect with my analysis based around the webinar education, looking at trends, support and resistance and key levels that I'm watching. As well, if you want to get access to my charts, you'll see my charts in a moment. Contact Nathan. I'll put his details in the chat in a moment. Nathan Bray at acy.com. Send him an email. He will organize the Telegram channel for you, the chart layouts, setting up the charts. If you've got any questions about account openings, anything like that, he's your go-to guy. All right, so that's just before I get into the charts, let me just put his details in the chat. There we go. All right, so let's have a quick look at what news is coming up before we get into the charts. It's a very volatile time at the moment. Excuse me one moment. All right, so I have experienced more volatility than we're having at the moment, but just in terms of news releases that's creating volatility, this has to be one of the most heightened times that we've had in a long time. So today, I just refresh this page. It will then tell me, oh, there we are. It is telling me there what's coming up next, 9 p.m. This is New South Wales time. We've got the UK interest rate decision. So what we've had this morning is the federal fund rate 75 base point change, and the press conference. We've had Japan's press conference. Sometime in the last hour, I think they intervened in the market because the yen pairs have moved down like 300 and 400 pips. I've discussed the general idea that they may be coming in to do that. And obviously, so there was the press conference. I think they've spoke about it a little bit. And then I think later in the afternoon, they've definitely come in and intervened. Or there's this discussion that they have, but most definitely the market's dropped. So something's happened and they've more than probably intervened. How long that intervention goes on, who knows? But you obviously need to be aware of the risk events that are happening. We've had the Swiss franc interest rate decision. The dollar franc popped up. We've had we're going to have the UK interest rate decision. And I've heard commentary that we're expecting possibly 0.75%, so 75 base points at the moment. This is saying 50 base points, so we'll wait and see what comes out. All right, so once we get past today, we do have flash PMI data coming out tomorrow afternoon, but that won't be as volatile as what we've been having over the last few days. So hopefully the market's going to start to settle down. All I'm really doing at the moment on the charts is getting my levels set, just waiting a little bit for the market to settle down. I'm looking for clear entry signals at levels that I'm watching. I'm not just going to trade at the level at the moment. It's too volatile, because with the volatility that we're having, let's go to the charts. And if we just have a look at the Aussie yen, for example, doesn't look too bad on the daily here, but when you drop it to the 15-minute chart, It looks even worse on the euro yen and the dollar yen. So it's very volatile. Some of these, there was a candle on the dollar yen this morning that was like 100 pips wide on a 15-minute chart. So that's telling you how volatile it is. These candles, some of these candles don't look too large, but if you measure them, they're very volatile. So we might just start with the dollar index. And we are, as I've been saying, been contending with this 79% retracement level. We're above it at the moment of the major range. Testing the upper level now of resistance here at 111.31. So I don't know whether you watched the FOMC statement this morning, but it was very volatile. Ultimately, I think the Fed's saying that they're going to keep raising predominantly at the rate they're doing until inflation gets under control. All right. Which to me is just the same drum they've been beating for the last few months. Nothing's really changed. So what we're seeing on the dollar index is we had a week down. We're having a further week up this week. We are testing that resistance level up there. We are on the day chart reversing at the moment. There's still the possibility that we are way long in the tooth for the dollar at the moment, and we need a healthy pullback. But with all this positive news for the US dollar, interest rates rising, Fed saying we're going to raise more interest rates, it keeps on keeping on. All right, but sooner or later, especially when we get to the currency pairs, people are going to start to think, oh, pairs to the US dollar, are these too low now to sell? And do we start to see some short covering? Okay, that's the thing that's in the back of my mind of a concern. S&P 500, let's have a quick look at that. So obviously we're seeing US dollar strength yesterday, weakness today on the day. S&P 500. Weekly chart is just holding to that weekly uptrend. It hasn't broken that swing point low yet at 37.17. So the weekly trend is just holding. However, it depends on what time frame you look at. If you start top down from the monthly, we've obviously put in another lower top. By breaking that weekly support, which is this monthly candle low here, is most definitely going to confirm that, okay, any uptrend that you might want to see here no longer exists. So it really does need to break that weekly support level there to turn the weekly down. So if it doesn't, there is still the chance that this wants to hold for the long-term move up, but we'll just have to wait and see what it does. All right, we're obviously positive for the day. 38.08 is a level of weekly support resistance. Have we just false broke it yesterday to move back above today? So just looking at the structure and trend there, the weekly trend is maybe just holding itself. Be interesting to see whether we get a rally today on the stock market. Is everything overdone? We'll just have to wait and see. But if we do break 37.17, then there's no question then that all time frames are down on the index. All right, I'm just going to start from left to right, go through the levels I'm watching. My charts are a bit slow with all this aggressive price action, and the price is changing very quickly all the time, and price is getting flooded. The platform's a little bit slow, but let's just go to the day chart. Excuse me. So we're obviously having an aggressive candle down today. The day chart trend has turned down there with a lower top, lower bottom. And we've moved back below the weekly resistance level. So wow, it was resistance. Then we're starting to act as support, but now we're back below. So with the intervention at the moment, over the next few days, let's just drop it to the 4-hour chart. I would start to be looking for, this clear, well-known level at 95.73 weekly resistance. Does price come up? I want to hold there on a rally. Look at your 4-hour fib. Wherever the low is, this could be the low, but you never know. Keep moving it. If this drops down a little bit lower, potentially that 79% retracement would line up with that weekly resistance. And in these aggressive moves that we're having, you don't want to be the seller. No, you don't want to be selling down here when it's dropped 300, the best part of 300 pips, because there's a high chance when you get this very sharp drop, it's going to reclaim some of that movement very quickly. So if you were looking to engage, look to engage on at the top of the retracement area. All right. Look for a clear setup to engage. All right, because market is very volatile. You know, that 150-minute candle here on the Aussie yen today. Well, it was nearly 110 pips. All right. I'd be a lot happier if the volatility and some of these candles are getting towards 100 pips. I'd be a lot happier when if the volatility could drop, because obviously large candles means large stops. You're having to trade smaller positions with asking the market to move a lot further. All right. So look for a clear setup. So I'm going to be watching 95.73, back to the 4-hour. Adjusting that fib as price keeps moving down. Maybe it's already bottomed in the short term. All right, I'm going to look, I'm not just going to trade at the level. I'll probably wait for a trend line break, something like that, to tell me that, okay, we've hit that level of resistance, maybe the 79% fib. I'm seeing a clear turn. All right. Doing nothing is an action. So of course we want to take action maybe to be profitable, but doing nothing at the times can be profitable, because if you did something, you could maybe have 1, 2, 3 losing trades in extreme volatility. This 4-hour candle was very large and wide and finished down, but before the bank intervened, this was looking very positive, like it was reversing back up the range. So this is how uncertain the market is at the moment with things coming out. All right, the Aussie dollar. Now this has, I put this in the Telegram today. I said price might go to the weekly chart, come down and test this weekly top, 65.70. I said we may bottom today between 6,600 and 65.70. We did. Makes me look good, but I didn't know it was going to do that. I was just looking at a very logical area where the market might look for a rally. So we have rallied from down in the area. And I said, watching 66.71, which is monthly broken support, and 66.81 broken weekly support. Weekly support here. Monthly is this area here. All right. So we are coming back up to test the area. If you go to your 4-hour chart, you'll see it. And drawing a fib across the range, we've probably tapped very close to the 79% retracement. We've definitely tapped the monthly resistance level. And you are going to start to see that, yes, we have started to sell off from that level. We didn't quite get there. All right, but we might go up for another retest. Time will tell. But I'd like to see like a trend line break or a swing point break happen. I'd like to be able to get in tight at this level for a sell maybe. Excuse me. All right, but confirmation that, yes, we've put a top in there. So if it doesn't give me what I want to see, I'll just be sitting on my hands. All right. So looking at 66.71 up to 66.81, the 79% fib area there. Kind of structure a tight entry, maybe close to the area. Might not be able to do it today, might be able to do it tomorrow. Price might just blow straight through the area as it continues in the day. We've just had a very, the market at the low point here. Do you want to sell? All right, so we're having a bit of a short covering here of 100 pips. It wouldn't surprise me. This is why I'm being very clear about having a very precise entry. Is it wouldn't surprise me to see this have another 100 pips move up. All right, so looking for a very clear entry. If we end up today on the daily charts, let me just move back to the daily chart. If we end up today, if I can get rid of that box, we end up today with a very clear reversal candle. we might actually be looking for a move up. So let me just tidy things up here. If we get a very significant reversal today, if we close above this monthly weekly resistance, all right, we could well be moving back up. This could all be well oversold. The last weekly range to the downside, drawing a fib on, is here. All right, we've almost met the 127 extension, and we've met a long time level of support that hasn't been touched since it got formed. All right, so we could be retracing all the way back up the range if the market wants to start to put in a significant bottom. So if we get a clear day chart candle reversal and close above these two resistance levels today, you're potentially looking for a trade to the upside tomorrow. Look for a pullback to the central pivot point. If the central pivot point holds, you could be looking to be a buyer up from the central pivot point. You could be looking, you know, if we close nicely above these two levels of broken support, you could be looking for those levels to be support tomorrow to move back up, because we are overextended on the weekly structure here. Okay, so yes, we can definitely move down further with the negative volatility of yesterday's interest rate decision. However, we are definitely, you know, overextended. So be aware of short covering on all these pairs to the downside versus the US dollar. All right, euro yen, much like the Aussie yen, now forming a lower top and bottom. This could move back up logically. This is a monthly top back in time, 140.104. More recent support and resistance, this top here, 142.31, this support area here that got broken. You know, just moving it down to the 4-hour chart. Look for retracement. In fact, I would probably potentially go up to the day chart top up there. That's the more significant top. And the 62 level lines up with your broken support. All right, so that would be a well worth level to watch for. Again, I'm going to be looking for a clear failure. Okay. You know, today we've moved down best part of 450 pips. All right, this is highly volatile. So look for a clear setup. Anybody in the market at the moment? And I'm just pausing because I've got some things coming in the chat. Aussie, quite possible to have a double top later today where the entry point might be. Yeah, we might double top up at that resistance level. But of course, we couldn't move through. We'll just have to wait to see what New York brings. Fresky, why have the yen pairs moved down? I think the Bank of Japan's come in and intervened in the market. They decided that the price of, for example, the dollar yen is way too high. So they've come in and intervened. I know you're saying, no, you're not into too volatile. Yeah, I'm not in at the moment. I'm just waiting for the volatility to subside. No action is an action, as I said before. Of course, it would be great to be able to get into an entry and, yes, get on one of these yen pairs and it moves 400 pips in your favor. Slav, you're saying you got gold early today. Want to move up? All right, good. Now, so that's what I'm going to be monitoring. 62% back to broken support there at 142.31. Okay. But I'm going to be looking for as tighter entry as I can with a clear signal to go and sell it, like a trend line break, something like that. Okay. I'm not just going to trade the level because at the moment, levels can be respected. We can see on the Aussie at the moment, it's been respected in the short term. However, if volatility picks up once more, levels can just be broken in very high volatility when in a 4-hour candle, we're putting in 400 pip range. Okay, so that euro yen could just simply move straight back up 400 pips and not even respect resistance. So you must wait for a clear setup, in my mind anyway. All right, euro dollar. Now, the 99.04, this is a long-term weekly support level from back in time. And if you go back in time, I've got another weekly level of support level at 97.08 in case we want to still move down. So this has been holding at all week except yesterday when it broke below. Latter end of last week and this week, just sitting on 99.52 weekly support here. But of course, we've broken down below that support level, below weekly support at 99.04 from back in time. Today, we've pushed up to retest 99.04. And it has respected. I mean, if you had an order sitting there to get in, you'd be in profit at the moment. All right, so as the volatility subsides a little bit, levels to look to trade down from 99.04, 99.52. All right. But I would be looking for, a setup, not just trading at the level. So, and I can see it's moving down. This could come back up for a retest. You might see a trend line break. All right. Excuse me. So, of course, you can be trading for first contacts if you want, but trade at your peril at the moment with the volatility that we're seeing. All right, but the levels to watch that have been acting as support until broken through yesterday was 99.52 and 99.04. So these could well now be at resistance. You can see it is resistance today. And we could more than well come up for another test. See the Fed statement here yesterday, we dropped down, pretty much held there at the 99.04 level. So it's held there once yesterday. It's held there again today. It could come up and hold once more. All right. So as the volatility drops, hopefully you might be able to get a tighter entry at that level or at the 99.52 level. So watch those levels over the coming days. All right, pound yen. Day chart here. This is stabbed down into these 3 weekly support levels. All right, if you go to the weekly chart, pretty much come down to the lowest level. We could form a double bottom down there. All right. So if we came back down into this area and you can see a setup to trade back up, great. But look for a setup. I mean, this has just moved down nearly 500 pips in 1 4-hour candle. Okay, so it's exceptionally volatile. So just wait for the volatility to subside. I just want to check myself because obviously, let me go back to my day chart. This level obviously could hold. However, if you see that the dollar yen starts to sell off day by day by day, I wouldn't be looking to buy a yen pair. Okay, if the intervention that we've had today is only a 1-day wonder on the dollar yen and that starts to totally recover the losses, then of course maybe look at a yen pair for an opportunity to buy on a setup at support. But I wouldn't be looking today or tomorrow for a setup here. I'd be wanting to make sure that no further intervention is coming around the corner on the dollar yen. Okay, so yes, I can see it's rejecting support, but just be patient. If you start to see the 4-hour chart structure change to up, and if you're watching the chatter, like for example here at Forex Factory, it's telling you here in the news, the headlines from the Bank of Japan, saying that the top currency diplomat Canada took decisive action in the Forex market. So pretty much they've intervened. So we might see some more statements over the next few days. All right, so of course it's respecting weekly support. You're just going to have to wait to see how price starts to structure itself in the lower time frames in this area. Pound dollar, and of course for the pound yen, we've got the interest rate decision coming out tonight. So price could further move down to test those levels, and maybe it wants to move through. So you just have to monitor. To the pound dollar. And to the monthly chart, this major monthly low, we have for the most of the week been wanting to trade fractionally below that level, 114.09. But wanting then to move back above. However, you can see we're trading at 113 at the moment. So we've obviously now 100 pips approximately below. That in my mind doesn't mean that we're now long-term below 114.09. We're below that because of the negativity with the US dollar and the Federal Reserve information coming out last night or early this morning. However, the market knows that this is a clear discount level. And the next level after this, really, if you're on your monthly chart and you squash it in, you have to go a long way back to like 1983 to this next major level at 104.63. I don't know if we can get down there anytime soon. You know, what are we, 900, about approximately 900 pips away, all right? We go back to that support low that we're underneath at the moment, but that's 1,000 pips away. So I can't see that we're going to get there anytime in the next couple of weeks. And the market may, you know, be looking at this level for long-term support. Of course, it could be looking at this level for long-term support, but we've got a good, well, we can move 1,000 pips in a month for sure if we really want to. Like some of these yen pairs, they've moved best part of 400 pips in a 4-hour candle, but I don't think we're going to get down there in the short term. And the market definitely knows that this is discount. All right. There's going to be a lot of people that have been short from up above, starting to think, you know, because, you know, what goes through my head when let's have a look at the structure on the weekly chart here. What goes through my head when I'm in a trade that I've structured nicely? Here's the weekly downtrend. We're putting in a lower top just short of the 62. I got in here, but unfortunately got out too soon because I got in when I thought support was holding here. Would have been nice to have stayed in, but we've moved through the 127 extension. Look at it. We've pretty much touched the 162 extension down here. What goes through people's head when we're down there? If you're in a trade, you know, if you got in up here at 62% retracement and you're at 162 extension and you're short, you start getting concerned that if you don't get out of your short, this is going to move back up and you're going to start to lose all the great profit that you've got. So there's going to be lots of potential short coverings where people have sold from higher above and want to get out of their sells. So they're buying. So that's going to start to add buying pressure. So Fresky, you're saying you've got a long position on the yen in a drawdown. Well, I don't know where you got in, but of course you need to manage that effectively. I mean, it's dropped 500 pips today. It could drop another 500 tomorrow, you know, so you have to bear in mind what it's done today. I don't know whether it will. And of course, it's down there at weekly support at the moment. But if we move below weekly supports, you know, that's telling you that all these long trades on the yen are getting covered. And that's what's creating the selling pressure. So, you know, try to manage your risk as much as you can. All right, but as I was saying, we're here with the pound dollar. Now, this might help the pound yen. The pound dollar is way, way overextended. If this was to move up, that will help the pound yen find some support. So, you know, monitor the pound yen in the face of what the pound dollar is doing, because this is way overextended in terms of the weekly structure. There's no way I'm going to be looking to sell this down here. For me, it's just too overextended. All right. If it holds at 114.09 quite clearly, I might look to sell down from that level, but, you know, trying to sell it too low, too far below 114.09, there's a high chance of short covering it at the moment. All right, so to the day chart, let me just get that feel off. We know we pretty much touched the 162 extension of that large weekly structure. All right, and as well, if you drew a fib over this smaller structure here, where we moved down there, came back up, got the 127 extension. So there's lots of things telling you that people could want to take profit down there. All right, so the big question will be 114.09. All right, and there's another level there, which is 113.50, which we've tested today, which is holding in the short term. All right, we come up to 13.50 and it's held in the short term. All right, but again, the level I'd be happier to trade down from if I could see a nice tight setup would be the monthly level, because that's the clear level that either the market's saying we've now broken it and we want to hold below it, or we're going to move above it. So what I'd like to see is price come up to that level, do a see then a setup on a 15-minute chart to trade down. Okay, wouldn't take much for this to come all the way back up and close above 114.09. So just be careful. All right, at the moment on the 15-minute chart, clearly what it's come up, it's retested. You know, the rally yesterday after the Federal Reserve announcement did get held at 13.50. So at the moment it's respecting the news high at the 113.50. But if that trades above there, it's most definitely coming up to retest 114.09. All right, so just be cautious. I'm quite happy to wait a few days and just let the ranges narrow down so that, you know, if I execute a trade, I can get away with a 30 pip stop rather than a 60, 70, 80 pip stop. Okay. All right, so I'm watching those two levels. Primarily, I'm watching this higher level up here. New Zealand yen. So let's go to the day chart. There's the collapse. It's come down to the base of this range. Discussed the base of this range in review last month that you could have traded down here. So there is the potential that, you know, over the next couple of days, we just drift back down to 82.96 and it holds to trade back up and it remains in this range. Comes back up to retest this area up here. It's going to all depend about what the Bank of Japan does and does it come back in to intervene. All right, so that looks quite nice to me. Out of all the yen pairs I'm looking at the moment, if from a perspective of a setup, and it is going against, you know, the negativity of the day, but this is clearly respecting a level that clearly operated very well last month and into the month before. Well, from June, this area has been keenly watched as support. And even in the volatility, it's held. All right. So if it was to come back down again and hold over the next few days, that's a level worth watching to trade around and trade back up. So that's the 82.96 level, approximately the 83 level. All right. But today it hasn't moved down as aggressively as some of the other yen pairs. It's about 230 pips it's moved down today. All right, so watch that. Potentially, maybe we're just going to stay in this range and move back up. I'd look more at the top of the range. Let me get rid of that level. This double top up here, I'd look at that as the top of the range. Now, with the range trade that I've taught you, let me just get my fib round the other way. I'm just going to use, the base of support to draw my fib in. I'm going to use the support and resistance. Okay, so I'll use that low just there. Now, when I trade the range, what I like to do is buy that support, stops at the 127 extension. Now, if you were wise today and you did that, even in the volatility, it would obviously be working for you. But over the next days, does it come back down to retest 8300 area? Does the 4-hour chart start to form structure which is positive? And can you get in by the 79% level of that range to trade up? Back to the daily. You know, does the 4-hour structure start to form to show an uptrend? Can you get in by the 79% level? Stop below the low to trade back up to the highs here. All right, so there's always that possibility that that could start to pull together. You just have to monitor how things work, but be aware of what's happening with the Bank of Japan at the moment, because if they step in again, this could be moving down to this area of support. All right, so New Zealand dollar. It is in a long weekly decline. Excuse me. Just want to take that level off. Here's the weekly structure where we fell down right to the 79% level. You know, we're beyond the 127 extension, where this is a daily chart level of support here that hasn't been touched since 2020, that we're just holding to today. All right, we might start to see some short covering here, like I've been mentioning on the other pairs. All right, in terms of looking to trade, let me just put that line back in that I deleted. We've moved below the weekly level at 59.21. Price could come back up and respect now 59.21 as resistance, or it could come up deeper to this area, which was daily support, 59.96. All right. So just have to watch and see how price respects the levels. And a lot of these pairs, though, that are in their weekly movements to their extensions at the moment, I'm more in favor that price will move back up. Slav, what do I mean by short covering? Well, at the moment, if you're trading the New Zealand dollar in the direction of the trend, you're short, aren't you? You're selling, you're short, you have a position that you've sold. So the term short covering means if you're short, you're going to cover your position and buy it and close it. So if I've sold and I'm trading down the chart at the moment, I'm short. So if I close my position, it's called covering the position terminology. So if I'm short, I'm going to cover my short. If, let's say, I bought a position, the terminology is long, and you know, if I'm going to close my position, I'm going to cover my long. So basically, yeah, as you're saying, closing the short positions. All right, so that's what short covering means. So there is a potential on a lot of these pairs to the US dollar that hardly been sold. They're at their weekly extension levels. All right, they're testing some major levels of support. They may have broken below some levels of support. But, you know, if you've sold, so you're short and you've got good profits, at some point you're going to go, okay, I need to take profit. So that's, you know, you're going to buy, you're going to cover your short, and potentially a lot of people, you know, if there's going to be a lot of people that are in shorts with good profits. And if they start to see price picking up, moving back up, they're going to go, oof, if I don't get out, I'm going to lose my profit. And then somebody else has the same thought, and somebody else has the same thought. And then they, you know, start closing their positions by buying. That creates buying pressure, and then the market's going to start to come up quite quickly. All right, that's what's happening at the moment on the dollar yen. When we get to the dollar yen chart where we've collapsed 400 pips, is suddenly all those traders that are long, they're covering their longs by selling. And that's why the chart's dropping. All right, so be very aware. This is another pair that's very, very long in the tooth to the downside. All right, look to your day chart. 59.21 is broken weekly support. That could act as resistance. Higher up, you've got 59.96. That could act as resistance. A much stronger level is this level here, 60.46. This significant weekly low that got formed. That would be potentially a very high level of strong resistance, all right, rather than this minor daily level. An older level is always going to be stronger. So this is a much older level of resistance. So that's at 60.47. So 60.47, that would mean we'd have to go up from where we are about 150 pips. That's easily achievable in this volatility for a couple of days. All right. So those are levels I'll be watching. I'd much, you know, on all these pairs at the moment, I'd much go for a much higher level. You know, I'm quite more than capable of sitting here waiting for a perfect level rather to try and engage because it's volatile and I think I'm missing out. Okay. So dollar Canadian, this is another pair that's way overextended on the weekly chart. Here's my weekly chart here. This is the structure where we've moved up, we've pulled back, we're beyond the 127 extension. We've gotten fractionally short today of, look left, this area over here. This is actually a monthly top. If I move to the monthly chart to show you, this monthly top here at 135.65. So we're getting up to levels of resistance that we haven't been at for a long time. We're overextended on the weekly chart. Doesn't mean to say we can't keep going up, but we're getting overextended. And whilst I'm using a weekly structured fib there to show you that we're way beyond the 127 extension. So it's the inverse look of what we're seeing on the pound dollar, the New Zealand dollar, the Aussie dollar. Today, obviously, we're withdrawing. We're just positive for the day. But look, there's another fib that you could be drawing in. And even that fib's going to tell you that we're overextended. The day chart fib from here to here. That's, moved 200% to the 200% extension, right? So this is way, way overextended. This could move all the way back down to this area here, the 132 approximate area, 132.08 here, and 132.23 here. All right, this could easily want to correct. All right, and on the weekly structure, because we're so overrun on the weekly structure, all right, this is the new weekly low, just here. Let me go to the weekly chart. Maybe now we've done the move on the weekly and he needs to pull back on the weekly. So, we start to get a significant pullback. This is the same for all these pairs with the weekly charts overextended. We could now be looking for 1 or 2 or 3 weeks pullback to the 62% level. That 62% level is at 130.45 approximately. That lines up with this weekly level of old resistance possibly becoming support in here. So if we start to see some weakness, we could be seeing those sorts of moves back down. But we'll have to wait and see what happens over the next week. So I'm just going to read the chats. Cameron's saying, would it also be good to wait for price to fail on all these stretch pairs and trade up the pullback or down the retracement here on this? I'm not quite sure what the last part of your question means. They're definitely overstretched, so they're all definitely due a pullback. Whether or not you trade the pullback, because that would be counter trend, I'd have to see something nice structurally. I'm still very concerned at the moment that even though I know these are overextended, that they still want to keep on going. So I'd need to see some structure in this area here, my 4-hour chart, to say, okay, I want to trade it the opposite way. So you're saying trade the pullback. If you can see some good structure starting to form, maybe a pattern forms like in this example here on the 4-hour chart. Maybe on the 4-hour chart here, we can see like a head and shoulder pattern form. So we know we're just short of monthly resistance. We know we're overstretched on the weekly range. If you see like a head and shoulder pattern at the top, or the pairs to the US dollar, if you see like an inverse head and shoulder pattern form, something that stands out nice and clear, that's fine. Just say on the dollar Canadian here, just selling because you say, okay, it's overstretched. It's been overstretched it was overstretched at the start of the week, and it's still been going up. So it could still go up for a few more days, if not a few more weeks, if it really wants to. So, this 4-hour chart at the moment, it's still showing you higher tops and bottoms. It isn't showing you a left shoulder at the moment. All right. So it isn't showing me anything that's saying to me, okay, sell me yet. But something might start to form over the next couple of days. We might come up and put in an equal high, for example. So for example, we've obviously moved just down at the moment. We could come up and put in an equal high, or we could form a lower top. Move, get my right drawing tool. We could, start to look like this. Then you might see a 79% retracement that you might want to sell for, again, another lower top to form to move down. All right. But at the moment, we're not seeing any of that negativity starting to form. So if you start to see price action structurally change and show that, and on the pairs to the dollar, if you start to see a 4-hour uptrend forming or an inverse head and shoulders pattern forming, then of course, that might be starting to confirm that we're going to get a reversal back up the range from these overstretched weekly chart moves. But at the moment, we're not seeing that. So it's just being aware of where are we at? Yes, we're almost at monthly resistance over here. We're way beyond the 127 extension on that weekly move. All right, so we are definitely overstretched. So let's just monitor it to see whether we start to see a reversal. Dollar yen is starting to pull back intraday there. All right, so on the weekly chart, as I've been saying for a few weeks now, last couple of weeks we've been holding at the 145 level up there. You can see today we pushed through a bit and we've actually had a week down and a week up today. That's how volatile it's been. All right. For me at the moment on this pair, see how we pulled back to the 62% level, weekly support. Then we moved up. I would just be looking for the same at the moment. 62% levels here, 136.43. Below it, we've got 135.57. Let me just refresh my memory. 135.57. Just trying to work out where I get that level from. All right, so daily level of resistance becoming support here potentially. All right, so on my day chart here, assuming that that is now a top, 135.57 just below the 62 level here, that would be a very good level. See, it was support, was resistance, we moved above it here back last month. So that would be a good level to watch to maybe start to structure to the upside at some points, but of course we're nowhere near that at the moment. All right, I don't know if I'm that interested with the dollar yen at the moment to try to engage the downside. I would have to see some nice structure, but structurally, even though the banks come in and intervene today, it hasn't changed the weekly picture at all. For me, all it does is potentially put this in a 1-2 week pullback, and then you're monitoring for the next higher bottom on the weekly chart to form to move up. All right, so at the moment, let's just get rid of that. Depending on how keen you are to engage, clearly you would expect, excuse me a moment, clearly at 145, 144.99 here, 145. The market's going to be looking at that. If we got back up to that level, the market's going to be looking at that level as resistance for sure. Okay. So, well, I don't know if we can get back up to that level, but if price was to get back up to that level and then it was to start to hold and you can get a tight entry, that would be a great area to look to trade at, to trade down. At the moment, this is kind of just respecting this day chart support here. So, there's a range from these highs up here down to these two lows here. Maybe it's just going to stay in that range, but drawing across the high to low, the 79% level coincides very closely with the top of that range. Looking at the top of that area, you might definitely see some selling pressure, but it might not get back up there. You're just going to have to monitor it. But for me, I'd still be looking for the weekly structure to pull back. And over the next couple of weeks, do we start to see another higher bottom form? But if we do pull back to that weekly structure that I'm saying, took 3 weeks to pull back last time to form that new upward move. This area here might take another 3 weeks to pull back there, but even if the bank's intervening just to lessen the price of dollar yen, nothing fundamental is changing. Interest rates are going to go up again probably next month for the US again. All right, the interest rate differential on the dollar Japanese yen isn't going to change. Maybe we're just going to have another corrective move like we had here. So down here, so I will be watching down here, just biding my time, waiting to get set for maybe an opportunity to trade here for at least a run back up to retest 145. Okay. Well, if May is saying what could have caused a sharp drop in the dollar in CAD pairs about 2 hours ago. Well, the dollar CAD's just selling off because it was overbought. But what happened? CAD yen, all the yen pairs sold off because the Bank of Japan came in and intervened on the dollar yen. All right, that's what's caused. That ultimately is what's caused the movement. The dollar yen's moved down. You'll see it here on the 15-minute chart. All right. So what's happening there is selling dollar, buying yen. All right. So that's selling of dollars. That's getting translated into the dollar CAD, selling dollars, buying the Canadian back. All right. That's what caused that. So it's not got anything to do with, as you say, the American market data. It's all to do with the fact that we've had the Bank of Japan press conference today, and they kind of talked about the fact that they might come in the market and intervene, and later on in the day, then they have come in and intervened. Cameron, Frank went up because of the interest rate. There was an interest rate announcement for the Swiss, which was they rose by 75 base points from minus 25 to 50 base points. All right. And you're telling me it went up, it changed 144 pips in 15 minutes. Yep, that's how volatile things are at the moment. That's why I'm saying I'm just sitting on my hands, just waiting for the volatility to subside a bit, being cautious. Pairs are definitely overextended. Dollar yen's overextended. That's why the Bank of Japan's come in and moved it down. Dollar CAD's overextended. That's why it's moved down. Some people covered some of their bought positions. All right, on the dollar Canadian. This is moving back up at the moment. If you go and have a look at the dollar Canadian, whilst we've been looking at the higher time frame, 15-minute chart is having a bounce back up, similarly in line with what we're seeing on the dollar yen. Had a good move down. It's just correcting that drop at the moment. Okay. All right, let's have a look at gold before we finish up. Here it is. We've been following gold. We know that we're below the major monthly level. There's 2 monthly levels here. This is the weekly chart look, but these are 2 monthly lows. Here you go. There's a monthly look. All right. So those levels are at 1676 and 1678. And for the last, what is it now? 1, 2, 3, 4, 5, 6 days. I think it is, if I count those right, 5 or 6 days. We've just been going up, down on those days, bobbing underneath that monthly resistance. Is gold going to be holding underneath that level for the long term to move long term down? All right. If we get, these pairs to the US dollar sharply moving up, so all those people that are in their sells start to cover their positions, and we see a little bit of US dollar weakness come in because of that covering, then we may well see gold pop back above that level. All right. A lot of instruments at the moment are a little bit unclear. I mean, you could say, well, this is clear as day. It's holding a resistance. I need to short it for the next, for the longer term move down. And that could well be what's happening. But when you're taking into account everything else that's going on at the moment, with the pairs to the US being very overextended to the downside, if they start to move up, this will possibly move back up above this level. Because if it moves back above this level, then the question has to be, is this level now going to be major support as it was before for a move back up? So it's, somewhat challenging. Is that level going to be resistance for a longer term move down? Of course, I mean, to the 4-hour chart, you can see it here. It does not want to get above here at the moment. So if we come back up into that area between 1676 and 1678, that's the high odds resistance level at the moment that the market's holding to. So you can obviously look to structure a tight entry for the long-term move down. Of course, you have a stop in place, and if resistance doesn't hold, you're wrong. All right. So it is holding there. So I think the play is to trade down, but there's going to be two possible plays. First of all, you trade that because you think it's going to hold, and we're going to see a continued move to the downside, or that would be the first trade. And if you're right, you obviously make profit. If you're wrong, you're going to get stopped out, and then we're going to see this trade above, and then you're looking for that level to become support. To trade up. All right, so at the moment, it's most definitely holding as resistance, but you can quite clearly see that it's in a tight range. So that to me is just buyers and sellers fighting it out for the longer term direction now. It is being held under the major broken support, but that could break above. All right. What you want to see really is the area that we're in. Let's just widen the area to the lower levels here. If we're going to have a longer term decline on this pair, it's not a pair, it's an instrument, commodity, but this little daily chart range that we're forming, if we're going to move to the downside long term, just wait for the base of this support to get clearly broken and show a clear break. All right, and then once we've got a clear break and a clear trend showing, then things are a little bit clearer to trade. At the moment, this is just in a tight range, so it's very difficult to, even if you took a position at the top of the range, tomorrow you can get stopped out at the top of the range if you're holding a position for the long-term move down, because it moves down to support, comes back up to the top of the range. So difficult to hold a position there until we see some clear direction. Slab. So Slab, you're saying you've been trading gold up and down in that range. Yeah, it's a very predictable range at the moment. If you wanted to, so if you're happy just to trade the range from up to down, that's great. If you're trying to look to think, okay, where is it moving over the next week to 2 weeks to month? At the moment, that's more difficult because it's just stuck in that range. So, I mean, the clear thing though for a longer term move is that broken support now resistance for a long-term move down. So there's definitely the predictability in that range for sure. My strategy of using the fib tool across the range. So let's use that middle low, that top there, trading at resistance here, stop at the 127 extension. You could have done that all week. Well, you would have got stopped out yesterday when the FMC came out, but as long as you're not trading with the FMC, it's just holding at that resistance level. And you could be doing the same thing at support, buying at support, putting your stop below the 127 extension and looking for the range to hold to trade back up. All right. It's been ranging there for quite a while now in the 4-hour chart. So sooner or later, it's going to break one way or the other. So yeah, it's predictable at the moment, as long as you're dodging the news because it was a little bit unpredictable when the news came out, because it pretty much hit the base of support and the top of the range all at the same time in probably the same 50-minute candle. But it's predictable to the point of staying in that range. But where is it going long term? I'd have to say at the moment, because it's holding below the broken support, potentially maybe it's moving, maybe it's moving down. We'll have to wait and see. All right. How many days have we been below there now? We've been below 1, 2, 3, 4, 5. This is the 6th day. All right. Definitely, we haven't had a close above. We've all been closing below. Or there might be one day there where we closed at. All right. So just have to monitor for a clear break one way or the other. All right, Slav, so you're telling me you've been trading that range, tight stops, so you had larger positions. So I'm guessing you've been doing okay within that range, as long as you weren't in it when the Fed did its thing last night. So that's good. Good to hear. All right, so at the moment, just be cautious. Have your levels clearly drawn out. I'm just going to be watching. Where are we? I tend to watch the headlines coming in here on Forex Factory. It's telling me what let me just refresh. Tells me what the BODG is doing. We might see some more information coming in over the next 12 to 24 hours about whether they're going to do something else. You might see most of these things at the moment are just tweets. All right, very short pieces of information. But what we might see over the coming 12 hours is some more detailed articles or headlines about what they have done, what they might be intending to do potentially over the next week. Then you can start to determine, do you want to be engaging on those yen pairs at the moment? Or do you, just want to be totally sure that they're not going to step in? I mean, if they're going to step in, for example, they're going to step in and they're going to move them to the downside. All right. So the risk part of trading those yen pairs at the moment is trying to trade something to the upside on a yen pair. If you're seeing a setup like I was discussing on the euro yen, coming up to this broken day level of support at 142.31, where it overlaps with a 62% fib, looking for a sell. Well, if the Bank of Japan comes in and intervenes, then they won't be sending it upwards. They're going to be sending it downwards. So the risk for these yen pairs is to the downside at the moment, not to the upside. All right. So if you're constructing your trades to the downside, it's less risky from an intervention point of view, because the intervention is going to move them down. All right. Because they're wanting, the yen to appreciate. So they need pairs to the yen to move down for the yen to appreciate. So maybe at the moment for those yen pairs, just stick to the less riskier side of the market until we maybe have that sense that, okay, that they've done their intervention for the moment and now there's nothing else to consider for the moment. All right. All right. Any final questions? So it is difficult at the moment. Just want to have a look at the Aussie dollar. I mean, Aussie dollar has held at 66.71. This, though, it did have a very impulsive move here. This could just be a pullback before it wants to move through here. But if it comes up again and it fails again, then, look for an opportunity to trade down. All right. So you're looking, of course, you're looking for a retest failure now. Does it come up, retest, fail? Aloof may ask me, has the BODG released its interest rate for the month? It's done its information for the month, yes, today. I don't think it's changed interest rates. They never change interest rates, Bank of Japan. But they've done their monthly statements. And they said at the time that They might want to come in and intervene because they think that the price of the dollar yen is too high. And then later on the day, around about 6 p.m. my time, approximately, they came in and intervened. So they haven't changed their interest rates. They've just come into the market and intervened and traded currency. Not on Forex Factory. Yeah, they don't talk about that. On Forex Factory, it is on Forex Factory, but it doesn't talk about interest rates. What we've got is the monetary policy statement and the BOJ press conference. That's all it ever lists. Because the Bank of Japan hasn't changed their interest rates for God knows how many years. So at the moment, interest rates in Japan are pretty much zero as far as I know, as far as my memory serves me. There is a little bit of conversation that they might start to maybe change their interest rates by potentially 0.1%, maybe 0.25%. But yeah, it never lists the interest rate because they don't change their interest rates at the moment. So it's not something that gets listed with an expectation of change. But when you see monetary policy statements, BOJ press conference on Forex Factory, that is their time of the month where they discuss monetary policy, what's happening with inflation, how is it affecting things. Do they give any kind of expression that in months to come they might need to do something to do with, you know, interest rates adjustments or bond buying or whatever else, or coming into the market and intervening? All right, so they have come out this afternoon and discussed intervening, and then they have intervened. All right, but as we can see, we've had the US interest rate decision during the last 24 hours. We've had the BOJ come out to do their monetary policy statement. We've had the Swiss franc raised by 0.75%. They were actually negative 0.25. Now at least you might be able to get some interest. In the UK, they're expecting 50 base points, but I have seen headlines that they might be doing 75 base points. So that's at 9 o'clock. All right. So the pound's going to be volatile then. There are no more interest rate statements for the week. So that's good. So next week, hopefully things settle down a little bit. And let's just have a look at next week's news. We've got USCB consumer confidence, Canada GDP, US core PC price index. All right, so much less news to worry about next week. All right. Whereas this week's just been a complete minefield of volatility, especially over the last 24 hours. All right, so I'm just waiting for the volatility just to subside a little bit. If I can start to see that happen, and I can start to see that some levels are most definitely holding, and you can structure a tight entry, then I'll be looking to trade. Let's see what the euro dollar is doing. Euro dollar might come back up for another retest of that 99.04 today. So things to anticipate today, just before I leave you, euro dollar could definitely come back up and retest 99.04. Does that hold and fail? Aussie dollar could definitely come back up and retest the 66.71 to 66.81 level today. Pound has tested the 113.50 level. That could definitely come up and test that level today. This, after the interest rate decision, could definitely come up and hit 114.09. All right, so this pair's probably off the table in terms of looking for a retest because of 13.50 in the short term, because once the interest rate decision comes out, this could go berserk for a good 30 to 45 minutes. All right, so a couple of pairs there that you might be able to trade around: the Aussie dollar at resistance up there, and the euro dollar up there at resistance, 99.04. All right. All right, everybody, it's very much interesting times. Hopefully over the next couple of days, the volatility drops. It's not the first time we've had high volatility this year. And as I've expressed before, during periods of high volatility, you don't have to trade. You can wait for the volatility to pass. We can trade, 365 days of the year almost well, except for the weekends, so a good 360 days in all probability. What would it be? Let me just see. Can't be through a good 250 days, I would say, because the weekend's 2 days. So, you know, if you can't trade for a week because it's just too highly volatile and you have to use too wide stops, or you're just simply uncertain about what's going to happen with the volatility, you just simply step aside until things look clearer. All right, that's normally what I do. So like here, as I was saying on the euro dollar and the Aussie dollar, simply look for failure, look for retest and failure, and try to trade as safely as you can. Make sure you're using stops. Don't be trading without stops. Your stops is your fail safe thing. If you're wrong, the stop's going to take you out. So just lessen your risk. All right, and be careful out there. So thanks, everybody. Have a good weekend. Look forward to seeing you next week. Hopefully the market's a little bit less volatile and we can get trading again.